How do taxes work with non-charitable gifts? The answer today on Elevate Wealth. Hey there, I'm glad you're all with us today. I'm Deanne Rosso with Elevate Wealth, and I'm joined once again by Rob Fezekas, our Director of Investment Policy. Hello, Rob.
Hey, Deanne.
Good to have you with us again. So, Rob, tell us, how do taxes work for the giver and the receiver of non-charitable gifts?
Okay, sure. So it is going to be different for the receiver and the giver of the gift. So let's start with the perspective of the receiver.
Okay.
So the first and most important thing to know is the receiver of a gift doesn't have to worry about paying taxes immediately if they receive a gift. Gifts are never taxable to the recipient of the gift. Now, the one caveat to that, just to be aware of, is if you are given something that's gone up in value that might have embedded capital gains, the cost basis of the gift that is given to you will transfer over to you, so that if you end up selling that property later, you may be responsible for capital gains. So you don't have to pay taxes immediately, but if you do sell something that's gone up in value, you'll have to worry about capital gains taxes potentially if you're the recipient of a gift. So let's look at this from the perspective of the giver. In most cases, the giver of the gift is also not going to have to worry about taxes. And that's because there's a large exclusion amount each year that says, in fact, this year in 2024, the rule is anyone can give up to $18,000 to any other individual, any number of individuals, and not have to worry about gift tax returns or filing extra paperwork or keeping track of it or anything like that. And so that actually means that a married couple could give up to $36,000 to each of their children if they want to, and again, not have to worry about any kind of paperwork. Now, if you want to give a larger gift than that, even more than that exclusion amount, you're still almost certainly not going to have to worry about paying taxes that year. And that's because if you give a very large amount, the IRS simply asks that you add one more form to your tax returns, the Form 709, kind of the famous gift tax return. And it's really just an accounting form, though. It's really just a form so that the IRS can keep track of these really large gifts because they end up impacting your estate tax exclusion. So everyone gets a very large estate tax exclusion amount as well. And this year, it's $13.6 million. So if we just look at an example where if somebody gave a $100,000 gift to another individual, you're not going to have to pay taxes on that, this year. It will just adjust that $13.6 million, and now you'll have $13.5 million as a estate tax exclusion amount. So it's really not something that most people have to be concerned about.
Right. So always great to be given a gift. Nice to give a gift as well. And for most people, we don't have to worry about taxation necessarily of that gift.
That's right.
But if you have questions about non-charitable gifts, if you want to gift to a family member, a friend, or if you have questions about charitable gifts, we're here to help. Thank you, Rob, for joining us today, and visit us if we can help at elevate-wealth.com and click Let's Talk. We'll see you next time.